If we look at the US dollar index, we can see that the decline of this asset has paused for some time. The lowest point which the US dollar index reached was at 96.70. Then the currency index managed to stabilize a bit and is trading in the area between 96.70 on the downside and 97.50 on the upside. We can see that the US dollar index is retracing the decline. The recent decline from a high around 99.76, and we now are at 23.6% Fibonacci retracement level. This is the first Fibonacci mark, and we can see that the index formed a lower, a higher low. This point was fixed on Thursday, and a break above the neckline of this formation, which may be a double bottom, a break above 97.42, will make the US dollar go up for a deeper correction to the upside. And in this case, above the Fibonacci level at 97.40, we'll target levels around 97.87 and probably the area of 98.23. This is a 50% Fibonacci retracement. So some potential for increase in the US dollar income exists, but if the US dollar index is not able to overcome resistance in the area of 97.40, 97.50, then we'll see continuation of consolidation in the region I've mentioned, and on the downside, the lower border of this consolidation range will come to focus, and will target levels around 97 and 96.70 for the US dollar index. In the longer term, despite the fact that the US dollar has potential for correction to the upside, it should be difficult for the American currency to return to bullish trend. A positive thing which helped the US dollar to improve its position by the end of last week was the release of the US preliminary GDP figures on Friday. Preliminary release is the second release of American GDP after the advanced figures, and in a month from now we'll get the final GDP reading for the first quarter. And this was a bright spot on Friday because the US economic growth in the first 3 months of 2017 was revised to the upside from 0.7% to 1.2%, so almost in 2 times. And this is certainly a sign that the slowdown in American economic growth wasn't as big as it was previously discussed, wasn't as big as some analysts and experts have feared. And these data certainly give the US Federal Reserve green light to proceed with the rate hike at June 14th meeting. We know that the market is really ready for June rate hike. Here I have the information from the futures market, the futures on the US federal funds rate, and the market is currently pricing in the almost 85% possibility of a rate hike by 25 basis points on June 14th. This possibility has increased, and well, I think that the Federal Reserve has done a good job in preparing the market to a rate hike. So I don't think that we'll get a disappointment at this June 14th meeting. On Monday morning, there were some hawkish comments from San Francisco Fed President Williams. And all in all, the picture looks positive with this GDP data and positive comments. At the same time, I can hear many opinions that because of the softening business investment and moderate consumer spending, we won't see the US economy accelerate in the second quarter. So as this rate hike on June 14th is already completely priced in the US dollar, the US dollar's rate. So this won't give the US currency a significant bullish driver, and it won't help the currency to return, let's say, above 98 points in the US dollar index. The markets will be very interesting, not at what happens on June 14th, but the market will be interested in what happens next. Will the Federal Reserve be planning another rate hike this year, or is this one the last rate hike? And depending on comments from Janet Yellen on June 14th and other incoming information, the market will get cues for where the US dollar will head next. If the Federal Reserve shows that it is really hawkish and it is seriously considering another rate hike or rate hikes this year apart from June, then it might be the case that the US dollar will be able to return to this uptrend. Otherwise, if the Federal Reserve is cautious, if the Federal Reserve is not sure that Donald Trump will proceed with his tax reforms and not sure that American economic recovery will continue as planned, well, in this case, we'll see the US dollar test local levels, and this consolidation we are currently witnessing in the US dollar index will be a flag, a continuation pattern, which will signal the continuation of the bearish dynamics in the American currency. So we currently see that there are problems with Donald Trump's administration still. There are some investigations, there are rumors about the connections of this administration and Russia, and this doesn't create a really healthy climate for the American dollar. So in the absence for now of strong Federal Reserve's drivers, I don't think that this week we'll get a lot of bullishness for the US dollar. In case we see that the currency fails to get above 97.50, we'll look for entry points for the short trends. Otherwise, we'll look for a chance to sell the US dollar at the higher levels.